Are you concerned about the impact of memory costs?
Memory costs, not so much. Memory availability, perhaps.
Nvidia's biggest threat isn't coming. It's already here. And the one analyst Wall Street trusts most just said something that every Nvidia holder needs to hear right now. For months, Nvidia has been the undisputed king of artificial intelligence chips. Every major tech company on the planet has been lining up to buy their hardware. The stock has been on an absolute tear, and the earnings numbers have been nothing short of historic. But something is shifting, and if you hold Nvidia, or you're thinking about buying it, you need to understand what's happening beneath the surface before the rest of the market catches on. Because the companies that have been Nvidia's biggest customers, they're now quietly building their own chips. And that changes everything. Let's start with what just happened. Nvidia just dropped its latest earnings, and on the surface, the numbers looked incredible. Revenue was massive, guidance was strong, and Wall Street was paying close attention. Chris Rolland, one of the most respected semiconductor analysts on Wall Street, was brought in to break it all down. He covers semiconductors at Susquehanna Financial Group and carries a $250 price target on Nvidia's stock. When he talks, serious investors listen, and his first reaction? It was telling.
What's your take so far?
Yeah, it was a monster guide. We were really concerned about capping that guide on supply constraints.
A monster guide. That's not language analysts use lightly. That means Nvidia didn't just beat expectations. They absolutely crushed them. And one of the biggest fears heading into this earnings report was whether supply chain problems would cap how high they could actually guide. The concern was simple. What if Nvidia can't get enough components to keep up with the insane demand for their chips? But that fear turned out to be overblown. Their supply chain team is handling it. And when you have the best planning team in the entire semiconductor industry, you plan ahead. According to Rolland, Nvidia has already locked in supply agreements looking out 2 full years. That's not a company scrambling to keep up. That's a company that sees exactly where this is going and is positioning itself accordingly. So everything sounds perfect, right? Monster numbers, supply fears gone, 2-year planning horizon. What could possibly go wrong? Well, this is where it gets interesting, because even with all of that confidence, Rolland dropped a quiet warning that most people glossed right over.
I'm just worried about how much upside from here they can actually get. I think there is still some room there, but perhaps the dream of dream scenarios might be a little bit more difficult to reach.
The dream of dream scenarios. Think about what that means for a second. This is a bull, someone with a $250 price target. And even he's saying the absolute best case outcomes might be getting harder to reach. That's not panic, but it's a signal. The easy euphoric phase of Nvidia's run might be behind us. From here, every dollar of upside has to be earned, and that's not the only thing changing. Because while Nvidia's hardware business is booming, something else in the tech world is quietly breaking down, and it has major implications for how money flows through the entire artificial intelligence ecosystem.
And unfortunately, software is being eaten by AI. And so some of the application layer investments are being compressed in terms of valuation. But hardware, it looks great.
Software is being eaten by artificial intelligence. Let that sink in. The traditional software companies, the ones that built applications, sold subscriptions, and collected reliable recurring revenue, are now watching their valuations get compressed. Investors are pulling money out of software and reallocating it toward hardware, toward chips, toward the physical infrastructure that actually runs artificial intelligence. And who benefits most from that shift? Right now, Nvidia. But here's the question every holder should be asking. How long does that last? Because here's where the real story begins, and this is what Wall Street is actually watching right now. The companies spending the most money on Nvidia's chips, Google, Amazon, Microsoft, Meta, are not sitting still. They're not just going to keep writing billion-dollar checks to Nvidia forever without asking whether they could build something themselves, and they are building something themselves.
So absolutely, the hyperscalers are going to make investments in their own silicon. I've talked about it on this show. I believe ARM as well as OpenAI are going to have a collaboration on their own ASIC.
ARM and OpenAI collaborating on their own custom chip. Google doing, in Rolland's own words, incredible things with their tensor processing units. Amazon doubling down on their own silicon infrastructure. These are not small side projects. These are multi-billion-dollar bets by the most powerful technology companies in the world, all pointing in the same direction, away from total dependence on Nvidia. This is the threat, not some scrappy startup trying to out-engineer Nvidia in a garage. The threat is Nvidia's own best customers deciding they want to control their own destiny, and that's a very different kind of competition. So let's come back to the question that's been hanging over this entire story. Should Nvidia holders be panicking right now? Here's where Rolland lands, and it's more nuanced than a simple yes or no.
That will happen. There will be a diversification outside of Nvidia. But if you look at the numbers posted by the hyperscalers here, they're still growing at a consistent company rate.
Yes, diversification away from Nvidia is coming. That's not a maybe, that's a certainty. The hyperscalers are going to build their own chips, run more of their own workloads on their own infrastructure, and reduce how much they depend on any single supplier. That's just smart business. But, and this is the part most people miss, those same hyperscalers are still spending at record levels. Their capital expenditure numbers are still climbing. The artificial intelligence build-out isn't slowing down, it's accelerating. Which means even as the percentage of their spending on Nvidia shrinks, the total dollars flowing into the artificial intelligence infrastructure space keeps growing. Think of it this way. Imagine a construction boom where every major developer starts manufacturing some of their own bricks. Yes, they're buying fewer bricks from the big supplier, but they're building so many more buildings that the brick supplier is still doing record business. That's the dynamic playing out in artificial intelligence hardware right now. And there's one more thing Rolland mentioned that most analysts aren't talking about yet. Two specific areas, he says, are the next places to watch. Optical interconnects and artificial intelligence power semiconductors. These aren't household names yet, but they're the infrastructure behind the infrastructure. As artificial intelligence clusters get bigger and more powerful, the systems that connect chips to each other and supply them with power become critical bottlenecks. The companies solving those problems are quietly positioning themselves for the next phase of this cycle. Rolland's words were direct. We're still in the early stages of a massive cycle. Not the middle, not the late stage, the early stages. That's a bold statement from someone who studies this space every single day. So here's the full picture. Nvidia just posted monster numbers. Their supply chain is locked in for 2 years. The artificial intelligence hardware cycle is still in its early innings. But the dream of unlimited, uncapped upside is getting harder to sustain. Competition from the hyperscalers is real, and it's coming. And the market is starting to price in a world where Nvidia is still dominant, but not quite untouchable. That tension between incredible fundamentals and real competitive risk, that's exactly why this stock moves the way it does, and that's exactly why smart investors are watching every single word from analysts like Chris Rolland right now. The threat is already here. The question is whether Nvidia can stay ahead of it. And if you think this story ends here, wait until you see what's coming next for artificial intelligence chips. Because what Google and Amazon are building in secret makes this look like just the beginning.